Welcome back to another episode of Mortgage Q&A with AJ. Today we will be talking about PMI, another abbreviation.
Another abbreviation.
So, okay, please tell us what PMI is.
PMI is private mortgage insurance.
Okay.
And the reason why it exists, it's for the lender, right? It's if you are purchasing a home and you are one of those people that have been like, I cannot buy until I save up 20%. Well, that is wrong.
That's what I thought.
You can actually purchase a home before you put down 20%.
But don't you end up paying more money?
You do, but I think the misconception is like back in the day, it was more expensive. Like now, to be honest with you, when I calculate the numbers, I feel like, think about it, right? You bought a home.
Yeah.
When you purchase your home, you have things to fix up. You have furniture to buy. You have new bedding. You have all these things you're going to spend money on. Sometimes you buy a home and you have to redo the backyard. Well, if you could put down 20% and now you just have no more cash, or you could put down 5% and your payment's $400 higher
a month,
but you got to keep $80,000.
Right.
That's a big deal.
Right.
Again, we've talked about it in all of these episodes, right? It's about your specific situation,
right.
and it's about the numbers.
Right.
And
Is it better to keep some cash or?
I'm a huge fan of keeping cash, and the reason why is you can find $300 tomorrow. You can find it. You can't find.
I want to know your secrets.
You can't find 50,000.
Yes,
right?
This is true.
It's a big deal, and when interest rates are this low, and we would do the calculation together. Like if I was your loan officer, I would have sat down with you and I said, "What are your goals?
Right.
Are you going to have to buy new things for this house? What are you trying to do? Are you going to get a contractor in there day one? How are you going to pay for that?"
All of these are yeses so far.
Right. So and if you haven't been able to do that because you put that money down, you're missing out, because I could have shown you on paper what that number is, what that looks like.
Right.
And the way that private mortgage insurance works is every 5% that you put down more, the mortgage insurance is cheaper. So in your case, you put down 20%. I could have shown you what it would have looked like if you would have put 15%. I could have shown you what it looked like if you put 10% and 5%. Now, each 5% would have made the mortgage insurance more, but I'm doing a loan for someone right now. They're putting 5% down. The mortgage insurance is $134 a month.
Oh.
That's it.
Okay.
It's not a lot of money. Like people think, and it's based off your loan amount, right? So it's a percentage. So if you put, because of their credit score, and they're putting 5% down, the mortgage insurance, it's a 0.34% calculation. So I take your loan amount times 0.34 and I divide that by 12, and that's what your mortgage insurance is monthly.
Okay, so because we was squeezed out that 20%.
Right.
And
a lot of people do that. It's because no one's talking about it.
Yeah.
The other thing is that with mortgage insurance, it falls off. On conventional loans, once you have 20% equity in your home, you can call your lender, get an appraisal.
Yeah.
And if you have the 20% equity in your home, the mortgage insurance falls off. So think of the people that purchased in the last 2 years. I have so many clients that they got a 3.5 interest rate. They bought their home a year and a half ago. I just called them recently. I got them a 2.75 interest rate, and I got rid of their mortgage insurance.
Wow.
So they got to fix their home up a year and a half ago because they put less money down. And then a year and a half later, that $134 is off.
Oh no! Where were you a year ago?
Right, exactly. And that's just how it works. And like I said, in other things, right? If you have a financial advisor, you're putting less money down, you give that money to your financial advisor. If you look at where the stock market has done over the last 2 years, you put less money down on your house, but you made more money. And your interest rate isn't different because of mortgage insurance. Your interest rate is exactly the same. You just have mortgage insurance on top of it.
Right.
Some people believe, well, if I have PMI, it means my rate's higher. No, I'm getting you the exact same rate that you would have had even if you put 20% down.
The PMI is separate.
The PMI is separate.
Okay. Okay, so would the PMI fall off for FHA loans as well? FHA loans.
Great. Good question. So remember, Federal Housing Authority.
Yep.
Yeah, so
We got to
there's
drill these.
two different types of loans. And with FHA loans, it does not fall off actually. The rule for FHA loans is it does stay on forever, which I think we will be going over the difference between an FHA loan and a conventional loan in another episode, so we'll talk about that. But the PMI does not fall off on an FHA loan. It does stay on forever, and you would have to refinance into a conventional loan to get rid of that mortgage insurance.
I see. Okay.
Right.
So that makes a difference.
Right, exactly. But again, in this case, I am speaking about conventional loans where the misconception is that you have to have 20%.
Right.
Let's be real. I mean, when you're saving for 20%, especially in this day and age when home prices are $400,000, $500,000,
It's so much money.
You're saving $80,000.
And closing costs on top of that? That's a lot of cash.
So you're looking at $90,000 that you're trying to save.
Yep.
And I mean, just think about basic numbers. If you purchased a home 4 years ago, you probably got the home for $150,000 less in California, right? Than you did today. So you purchased, you put 5% down. Now your house is worth $150,000 more than it was when you bought it.
Right.
And now you're putting yourself in a situation for success.
Right.
If you've waited to save that money, because it's taking 3-4 years to save $80,000 if you even can.
Right.
Right. I mean, that's
a
lot of money to save. So if you're taking care of that and you've waited, you're now buying the house for $150,000 more than the person did 4 years ago who knew about, just by knowing someone that said you don't even have to have that money down.
Right. And I think a huge thing that I learned in the moment of buying a home was we were so worried about getting this 20% down payment and how big the down payment is.
Right.
But the closing costs.
Right.
Those are really high as well. You have to factor that in too, because we kind of just ran into it. We were like, oh, we owe that as well.
Right. Yeah, it is definitely, and refinancing to purchase, right? Purchasing a home, you can't roll the fees. You cannot roll the closing costs into the loan. You have to pay them out of pocket, unless you take on a higher interest rate where the bank covers the closing costs for you. So it's a huge thing that needs to be discussed because it adds up. I mean,
you have to factor that in.
And it's all third-party closing costs. It's title and I know in other states you have
all these boring things you have to pay.
In other states, I don't. Other states you have lawyer fees.
we
like
have
obviously
lawyer
California,
fees.
we don't have lawyers that have to deal with it.
Oh,
so
wow.
You,
Yep, we have
you get to
those,
escape that, but in many states you have lawyer fees, and that adds up, and everyone's out to get some money.
Yep. So when we were buying our house last year, we saved up the money for the 20%, which was a lot of money. We put that down. Then after closing costs, which was a ton more money that we weren't prepared to pay because we didn't really realize how much closing costs could be.
Right.
So basically, we didn't have any cash left, but we wanted to fix up our house.
Right.
So now we don't have any money to fix up our house. What could we have done differently?
Right. And what I would have done differently is, again, I would have gone over the 5%, 10%, 15% options, right? So you could see that mathematically. One number that I've kind of broken down is every $1,000 that you put down or less that you put down, it saves you or it adds $4 a month to your payment. So it's a basic concept. It's a basic concept, and that's where interest rates are right now.
That's basic math. I like this.
It's so cheap, and that's how I explain it to my clients. Is if you're asking for cash out or you want to put less down, I say, okay, well, if you keep $50,000, it's going to cost you $200 a month for your payment.
Okay.
And to be honest with you, right now money's so cheap, everyone's saying yes to that.
Right.
Like if you wanted to fix your house up, if it was going to be $50,000 of renovations and you knew that it only cost you $200 a month, you'd sign up for that right now.
Right.
You can't get a credit card for that. You can't get anything for that. No one's even going to give you a loan for that. If you called your family members, they wouldn't tell you, we'll give you $50,000 and pay me $200 a month. That's just hardly any interest.
Right.
So that's the key is truly breaking down the numbers and focusing in on that and not using and thinking PMI is negative. Because when you Google PMI, people all over the place it's so negative about it.
Yeah, you do think it is.
But then they have no idea what the true number breakdown is.
Right.
They just say PMI because it used to be that way. It used to be, even FHA, people think it's a bad loan.
There's a stigma around it.
Down payment assistance, people think of it as a bad loan. And it's if you really look into it, it really helps more people than it hurts.
Wow, that's very interesting because, yeah, I definitely had the wrong idea of what it was and what it could do for us and how it was going to hurt us. And so,
And the sad thing is after you put that 20% down, because cash out refinances, as we talked about, are 80% loan to value, you can't go back and get the money. You now need your house to increase in value to now try to go get that.
oh, fingers crossed.
The good news is next week we will be talking about taking out an equity line of credit or a second mortgage. So that will be something that we can discuss on ways that you can find ways to get your money back.
Oh, great. So tune in next week. And that's a wrap on today's episode of Mortgage Q&A with